Well, as you can see over here, the goat and the big lie taught about the goat being hedged against market crash, it's no longer the case. Everyone should wake up. Just look at the market. If you hold $100,000 in S&P 500 today, you will be down only 1.1%. If you hold gold, you will be down close to 2.5%. So tell me how the gold, silver, precious metals could be hedged against the market. And I told you and I explain you why. Since all the big individual investor crowd moved into the gold, created this buy and sell mentality, the gold and silver have lost completely hedge against the market. And this, if somebody today comes to you and tells you, buy gold, buy silver, tells you that this is going to prevent you losing money if the market crashes, it's one of the biggest lies. This guy either lies or this guy has no clue what he talks about, okay? Because here's the numbers. Even the biggest bullish people on gold and silver, the most heavier investors, concentrated bets, 100% in their portfolio in gold and silver, they cannot oppose the numbers. Why the market doesn't go lower than the gold? Why the crypto doesn't go lower than the gold? Just look at the numbers. Even NASDAQ, which reflects 1-to-1 ratio with the price action with Bitcoin or crypto market overall, is down only 1.5%. And people calling Bitcoin the bubble, and people calling the crypto the bubble. But if the bubble is down only 1.5%, considering all the AI stocks, boom, hype, why the gold is still deeper sell-off, 2.5%? And it's not over. You know what's funny? I told you, if the gold fails to break 5100, holds above 5100, this week the gold will fail big time. Guess what? The gold currently, it's barely holding 4900 and it will go lower. Why? Because the crowd mentality is still out there. First thing, if you really want to see the gold to stabilize and go higher, you have to erase all the individual investors that just hop in. Anyone who purchased for the first time gold or silver in 2025, 2026, these are the people who create the issue. These are the people who are lagging sophisticated analysis about the gold and silver. They're the one who will be bailing out. The first people who will leave the ship when ship starts sinking, because they don't buy it because they understand what's going on. This means that every time when they buy, they hope it's gonna go up, but it goes down. They're gonna be the one first selling. This is why it's happening, and they're gonna be dumping on you. For all the people holding the gold for the long run, these people, they're gonna be selling. They're gonna be dumping on you, and you're going to be losing. The funny part is that the gold investors are the one who are hurting each other, who are hurting the gold price action itself. It's not somebody talking negatively or giving you a reality check. I'm giving you a reality check, right? We're just running the numbers. I'm not imagining what's going to be the S&P 500 tomorrow, what's going to be the Bitcoin price tomorrow, what's going to be the gold price tomorrow. No, we're talking about right here, right now. And right here, right now, the gold is crushed and the gold has no added intrinsic value, which means when there is no value, when the hype is over, when the sentiment changes from bullish to bearish, well, the price will crash and you can't do nothing about it. Second important element over here. People are not as stupid as most of you think. So if they bought into the lie that gold will protect you from market crash, and they see in real time that it isn't protecting you in any shape or form, well, people will say, why would I spend $5,000 on average to buy gold when the gold is losing pace faster, is losing me money faster? Also, the gold is less liquid, right? I cannot really go to the bank and borrow against my portfolio of gold and silver or palladium or cobalt. Why? Because the banks have no risk tolerance. I'm not sure you can actually borrow against any other crypto except gold, except Bitcoin, right? But again, you do understand that the people who were buying crypto are almost the same crowd of people. People who are buying in 2020, 2021, all the way up to 2026 are usually the same people. So you had this process of maturity of the investors where they understand they already experienced 3-4 bubbles, 3-4 bear market crashes, 3-4 scam exchanges falling apart, liquidations, bankruptcies, right? We already saw that. But the gold hasn't experienced anything. The gold has been sleeping for the last 20 years. Now the gold has a small run up, so it scoop or attract some of the, let's say, less sophisticated people having some money on the side, trying to make some money, quick money, swing trade the gold. They failed because, like I said, the price action showed you it will not hit the 5100, it will not hold 5100, which essentially meant it's over, right? And a lot of people will be selling off, and they will be selling off on loss. The problem for these people is that this is not year end. You cannot tax loss harvesting starting from now, because they are going to mount even more losses in different asset classes. The year has just begun. So what is this telling you? What is the future of gold and silver? Like I said, there's one problem and one problem only. The gold has to regain its main functionality, which is hedge against the market. And explain simply. Before, people were buying gold because gold was not crashing when the market was crashing. Usually S&P 500 will be down like today 1.1%. The oil stocks will be up around 2.5%, and the gold will be up around 2%. Usually in normal market conditions. Gold and oil lost this functionality. It made them same like the stocks, same like crypto. Why is that? Well, like I said, when you have a lot of added volatility, a lot of money that are short-term oriented into the gold or silver, meaning other people came in, I have $10,000, let me buy in today and sell tomorrow. So having this exhausted liquidity coming in and out in a period of 48 to 72 hours, in some periods, like today, a lot of people will be down and their swing trading plan from yesterday, it doesn't play out. It works against them. Not to mention there is a completely separate part of the market which operates on the leverage. They don't invest their own funds, they borrow funds to be able to expose themselves to greater potential return, which allows them to operate with greater capital. These people most likely are already liquidated, or depending on how much money they actually borrow or what type of multiplier they're using, they're going to be liquidated later on this day, because the gold will go lower, in my opinion, in this very moment. So prepare for much more harder days in the future for gold. And I know if you're extremely bullish, just look at the numbers. Forget about your thesis is, what you think. Just look at the numbers. If the numbers are telling you you're wrong, you're wrong.